Welcome to Sun TV Network's Q3 FY21 post-results earnings call. As usual, from the management team, we have with us Mr. R. Mahesh Kumar, Managing Director, Mr. S.N. Narayanan, Group CFO, and Mr. V.C. Unninkrishnan, CFO. S.N., over to you for any initial comments if you'd like to add.
Yeah, as usual, we'll throw the floor open. We'll start with the Q&A in the interest of time because we have about an hour. We'll deal with all the questions on the state of the market, prospects for advertising, subscription, the whole gamut. Over to you, moderator.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question at this time, they may please press star and 1. The first question is from the line of Kunal Vora from BNP Paribas. Please go ahead.
Yeah, thanks for the opportunity. Can you just start with the revenue breakup and depreciation amortization, and then I'll come to questions.
Yeah, Kunal, the advertisements 309 crores, broadcast revenue is around 1.6 crores, international subscription revenue is around 29 crores, digital revenue is around 200 crores, DPH is around 224, IPL is around 209 crores. In terms of depreciation is 23 crores, amortization is 46 crores.
Great, thank you. Now, your thoughts on advertisements. Like, how was the performance in 3Q, and do you see it as a temporary spike, or do you see the benefit sustaining? And do you expect to get to FY20 levels in FY22, or that looks like a stretch?
Hey, Kunal, the most important point, I'm glad you raised this question because a lot of people will be wanting our answers on this seemingly tepid third quarter. The point to note is we have a very significant revenue streams coming from the local retail players, local jewelers, local everything almost, silk sarees, and in fact, some of these like Saravana stores commission top-rated film producers and directors to make their commercials. They spend a lot of money. This time around, because of the extended duration of the lockdown and the kind of protocols that were in place, though some of the malls opened up towards the end of the year, the footfalls were very, very few and far between. So some of these big, merchandisers didn't advertise. And not only do we have a very significant portion of the overall revenue mix coming from these local, players, it also coincided with the festival. So we are comparing a festival quarter of the current year as against the festival quarter of the last year. So, but if you look at it from a sequential quarter basis, there is a significant ramp up from September 20 to December 20. So this is a point to be noted. And I'll request Mahesh to give further color on what we are seeing in terms of post 31st March, because there are some, green shoots that are emerging now.
Yeah, I completely second what SL is saying. We have progressively, compared to what we were in Q2, now we are seeing some good traction in the numbers. As we speak, the subsequent months, Jan, Feb looks pretty positive. But I think the point to note is still the retail segment has not fully come on board. And if you really want to, dwell deep into our numbers, there are some specific reasons as to why the ad revenue is showing a negative 9.5%. For example, just to give you a reference, in terms of the movie premieres, you would have noticed there is a big drop in the amortization cost. Last year, same quarter, we had 22 movies which got premiered. This quarter, same time, we had only 6 movies. So I think that also will, to some extent, reflect in the overall ad revenue. And there were some, special events which happened last year, which was not there. And movie as a category in terms of the spend, like all these movies, when they come for theaters, they also use our channels to advertise. So that was not there. So these are broadly 4-5 big ticket items which has contributed to a marginal degrowth as compared to what it was in the previous year. But we are seeing some good traction happening. Hopefully, I think relatively we should be progressing and inching towards the revenues which are there in the previous year.
Yeah. So just like the point which I made earlier, so FY22, any initial thoughts? Do you think that getting to FY20 levels will be possible, or that looks like a stretch?
I think we are very optimistic. I think that's a given. That's a given.
Okay, so you expect to get to FY20 levels in FY22?
Yeah.
Okay, that's it from my side. Thank you.
Thank you. Participants, if you wish to ask a question, please press star and 1. The next question is from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Good evening. Thank you, sir, for the opportunity. A couple of questions from my side. How has been the rating on the Tamil TV side, and do you think the dip we saw in the ratings, particularly in the prime time, in the Tamil GVC is also now incrementally hurting us, because one of your competition has listed the advertisement revenue, and for them it was plus 7.5. There's a good 16% variation in the ad revenue for us versus one of our listed peers. It looks quite drastically. And number two, can you just give us the breakup for us in terms of what is the local contribution versus national contribution? That's the second one. And the third one, we keep telling that we have close to 55 to 60% contribution coming from FMCG. That looks like a pretty bulky one, and that's doing, I think that's the same for the industry, and that is doing okay in my sense. So can you just give us a breakup of other segments which is now hurting us incrementally apart from FMCG? These are the three questions. Thank you.
So in terms of the viewership for the Tamil flagship channel, we have always been maintaining in terms of the absolute GRP numbers. We are same as what were in the last year, so there is no degrowth. But in a relative share point of view, there has been a degrowth, which is a trend which we have been witnessing for the last 2-3 years, which coincides with some big ticket show called Big Boss, which happens in Vijay TV. To be fair, I think there's also been some prime time fiction slots where I think they have given us tough time, but I think incrementally we are seeing these shares falling down. So we are completely rejigged our prime time FTC from 6:30 to 10 o'clock. We have been continuously launching new fiction shows, and every single launch has given us at least 15-20% improvement in the overall viewership as compared to what it was 4-5 months back. And even this month we have a launch on the 22nd. So our endeavor is to basically revamp the complete the prime time and bounce back to at least 50+% viewership share. So that's work in progress, but I think it will take at least couple of months for us to regain the improved viewership share. Yeah, the second question is...
What would be the impact of that on the advertisement revenue for us, if you have an estimate on that side?
Like I said, basically we have not seen much of an impact due to that. But like I said, some of the reasons which could attribute to the overall impact is because of the big ticket movies which we had in the last year same time, impact on the retail segment. And also we had mentioned in the past in terms of the inventory, we had reduced the inventory from 16 minutes per hour to 12 minutes per hour, but beginning of this quarter, 16 has become 14. So that also had been one of the biggest contributors to the revenue in terms of the impact, because we strategically we wanted to overall improve the yield and then maybe release the inventory. So these are broadly the reasons for the dip in the revenue, but I don't attribute straight away any loss of viewership, because in absolute terms there is no much of loss. So though in terms of relative share, in terms of viewership percentage, there has been a 2-3% drop. But I think we have seen that improvement in January, which is close to 42% from 39% in December. So like I said, we will progressively see that improvement happening in all channels. We have lined up programs. We are launching some really big ticket shows in Telugu, Malayalam, Tamil. So I think we are working towards overall improving our share in all the respective markets. With reference to the FMCG, FMCG still continues to be the biggest contributor in terms of the overall percentage, and they still continue to remain the same. And I didn't. What's the third question?
The second question was a mix of local and national in our advertisement, and I understand that FMCG is a big part. I just wanted to understand which are the other sectors which are underperforming here. That was the intent of asking that. For
example, if you take jewelry as a segment, it is linked to the marriages and all these functions. So that is one segment which is not as aggressive as what used to be. And some other big retailers like Saravana Stores, Cookies, which are big names in this market, they have not come back fully because people have not started visiting the store, or I think they are not spending too much. So there was a lot of purchases happening through e-commerce.
So I think if you can give us national and local, I think that most of it will explain by that, because the way you are explaining it looks like local, particularly the retail is what which is most hurt, and the second is the movie releases. So if you can just give the breakup of national, local, and
retail is around 10-12%.
And what is the mix between national and local this year and comparatively last year same quarter?
We don't have that.
Historically, our retail contribution used to be around almost over 30% or more, which has now come down to this 10%.
Thank you. Just one follow-up question on the initial remark you made, sir. We are talking of revamping the entire content bouquet. So does that mean that we can expect some inflation in our programming costs? And are all this programming coming on a commission model, or it's a private producer model?
Majority is on commission.
So that infers that given we are investing on the content, our programming cost may see some increase going forward. That's a fair assumption?
Yes, it will go up.
Okay. Thank you. I have 2 questions, but I will come back. Thank you, and best wishes.
Thank you. The next question is from the line of Venkatesh Subramanian from Qtr3 Capital. Please go ahead.
Yeah. Hi, good evening, sir. Congratulations on a good quarter. Just 2 questions. One is, I think you had indicated in the last couple of calls that we have a lot of reserves, and you might want to spend that effectively by either doing a buyback or a liberal dividend. So is this interim dividend, is this the quantum, or you might do anything more before 31st March? That's my question. Or any highlights on buyback or higher dividend, number 1. Number 2, over the next 3 years, what kind of, I know you don't give guidance, but is it safe to assume something like a 15 to 20% growth in PAT over the next 3 years, broadly, as an internal target?
Yeah, Steve, at this point in time, it certainly looks better than what it was, 6-7 months back, when it looked like the whole world was coming to an end. Certainly, things are looking better. And as we just mentioned to you a short while ago, we should be able to do the FY20 ad revenues in FY22. On the growth for the next 2 to 3 years, I mean, we do have certain plans on how to, grow this company, where all to go. But I think it would be very premature and, in fact, inappropriate to put this on a call, internal business planning targets. So I would, at this point in time, stay with what we see as a possibility for FY22. Certainly, there is a bounce in the economy, and there is no reason why a leading network like Sun TV should not get a fair share of that revival in spends. And on the use of cash, again, this is so, price sensitive. We just present all the options to the board. Theoretically, a buyback makes enormous sense. So, in my own personal view, that should be the way to go because of this tax efficiency and various other reasons. But then, we have to go by what the board decides. At this point in time, I will not be able to even confirm if there is a second interim which will come before 31st March. The honest answer to that question is I don't know. But one thing that we are very sure about is we will. If you look at the dividend that we declared just before 31st March of 2020, we gave a special dividend because at that point in time, it was seen that our accumulated profits was extremely large and it was depressing return ratios. So the board decided to do a special dividend, and we cleaned out a significant sum of money. So taking a cue from that, I can only reiterate that the board is extremely conscious of the need to return cash that is not required for sustaining existing levels of operations. And we also know that paying out cash is an excellent way of signaling to the market that we are, extremely conscious of minority shareholders' interest, because nothing gives comfort better than, throwing out cash systematically in large dollops to the shareholders. So with that, I will stick to this point that we agree with the point, but we can't throw much light at this time.
No, sir, I'm actually not. I think I completely understand that you can't commit, it's price sensitive. The only question that you yourself said is before this fiscal, the board will. My question is, it's on the cards it's internally debated, discussed. You will take the appropriate decisions. That's what you mean, yeah?
Yeah. In fact, the only person who's on the board here is Mr. Mahesh Kumar, and in fact, neither only now me can comment on this. And then it's a collective decision, and it will definitely be taken at the appropriate time.
Understood, sir. A follow-up question to the business plans. So you said if we are able to do the same numbers as FY20, so FY22 over FY21 can actually be a decent number. Can we say, putting some numbers to it, can we expect some double-digit growth there in terms of top and bottom?
In fact, this is what everybody is saying now. The economy shrank by 10% in FY21, so 100 became 90. So if you go back to 100, it's 11% growth.
Absolutely. Okay, great. So one question something interesting point you made is that as part of your internal business plans, you have a lot of things that you are debating internally. So while it may be confidential, would it be fair to assume that you will have some thoughts on monetizing Sun OTT or your digital platforms, which are excellent? And would you consider some sort of a strategic tie-up with global majors? Anything on the cards along those lines which can help you to take the digital to the next level?
No, nothing on the anvil. We don't have any such plans to hive off anything. In fact, this question keeps coming up all the time. So everything will be within the listed entity.
Okay, but do you have some business plans to monetize that, sir? Which is in terms of the kind of growth that you're showing there is amazing. Would you look at some sort? I'm not talking about demergers or anything. Some sort of a tie-up, something where you think it makes sense for Sun TV to keep that as
Nothing at this time.
Nothing at this time. Okay. Thank you so much. Thank you.
Thank you. The next question is from the line of Alankar Garud from Macquarie. Please go ahead.
Hi, thank you for the opportunity. Sir, first question on subscription revenues, been broadly flattish since the past few quarters. So any reasons for this? Is this delay in the new tariff order one of the key reasons for that? And if you could update us on the progress of digitization in Tamil Nadu, that would also be helpful.
No, I think not much of a change. I think cumulatively we are still up by around 11%. On a sequential basis, the numbers have not caught up much. Some agreements are pending in a couple of states. So I think once that gets normalized, possibly we will also do we have taken a certain amount of accrual revenue in the respective quarters, but I think once we have a clarity on some of the agreements which are pending, possibly the revenue numbers will change.
And on the digitization progress in Tamil Nadu?
But progressing, I would not say that there is some great numbers coming in, but the analog overall percentage is coming down, it's shrinking. So now we estimate around 30% of the total market size to be still analog. But on a month-on-month basis, we are seeing more traction from the DTH and cable digitization happening, while all other markets are more or less reached saturation in terms of digitization. But Tamil Nadu, we still feel that is the scope for 20% growth in the digital subscription.
So broadly, sir, maybe about 3 to 4 million subscribers are still on analog. Would that be a fair number?
Yes.
Okay, sir. So my other question is on international. I think again this quarter is abnormally lower. Any thoughts there? Is there any one-off sitting over there? Because from being consistently over 40 crores odd, now it's down to 29 crores if I heard correctly what Unni sir said.
There again, I think there are a couple of agreements which have still not got firmed up. There have been changes in some of the players. So we are scouting for, there's a transition happening. And that's why we are not recognizing the required revenue in those markets as well. So hopefully we should be able to conclude it during the March quarter.
Understood, sir. So basically no change as far as the underlying dynamics or no plans to exit some regions, nothing like that, right?
No. It is only the lack of clarity or confirmation and the agreements being signed off. We have just delayed it for some more time.
Fair enough, sir. So my other question is on Sunnext. Last quarter we had said that we would be doing the original investment starting the first half of FY22 with starting with Tamil and then Telugu and then a staggered launch in the other 3 languages. So any thoughts there, sir? Because if we have to start investing in the first half of FY22, we'll have to firm up. I'm assuming we would have firmed up some plans by now. So if you could share your thoughts on that.
No, we can't announce plans, but we are in discussion.
So that plan of starting investments in the first half of FY22 on Sunnext, that stays?
Yeah, that stays. We will, as soon as we are ready, we will make those announcements.
And what would be the number of subscribers now, sir? We had, I think, 18 million last time.
It's around the same time only. It's the same number only. It has not moved up significantly.
Fair enough. And one final question, sir. As far as market shares in the non-Tamil languages are concerned and your investment plans, any thoughts there, sir? Because we really haven't seen the market shares improving significantly for us for the other 3 languages as well. So any thoughts there? What are our investment plans?
So like I had mentioned, you will see some announcements coming. We are almost in the verge of launching some big ticket, non-fiction shows in the other 3 markets, some international format shows, which will facilitate us to further improve our give traction to the fiction shows. So maybe I think the next 1 or 2 months all this will get launched. So we have decided to make some big investments and do some big ticket shows in this market. With reference to some new markets we entered, like Bengal, we will see our viewership share of almost double from 68 BRPs to close to 120 BRPs. So that is tracking well, but in other markets, that will be 10%, close to 10%.
Okay, sir. Thank you and all the best.
Thank you. Any participants who wish to ask a question at this time, they may please press star and one. The next question is from the line of Yogesh Kirve from B&K Securities. Please go ahead.
Yeah, hi. Thanks a lot for the opportunity. So now that we have more visibility on the theatrical ecosystem, so could you give us an update regarding FY22? What sort of the investment could actually pan out and the movie releases can pan out over FY22?
Yeah, as of now, we have about 5 movies in the pipeline. The one with Rajinikanth, one more with Vijay Sethupathi, one with Surya, one with Dhanush, and the other one with Vijay. So those are the agreements which we have entered into, and I think at least of these 5, we expect to release 3 to 4 during the next fiscal, 21-22. Maybe one we may move on to the next 2022-23. We also might be getting into smaller ticket production. These are all big stars productions. That we are also looking at opportunities where we take small ticket productions, which in the range of say 5 or 10 crores or so. That could come during aside of these 5 assignment projects in the pipeline.
So what would be the aggregate investments, at least for this 5 big ticket movies that already in the pipeline?
It should be in the order of around 300 to 350 crores.
Okay. Secondly, regarding the movie amortizations, so any guidance for the fourth quarter or the annual for FY22, now that we have started seeing some movie releases taking place, at least in the South Indian market. So would we be back to that 400-450 sort of run rate for next year?
The theatres opened up in Tamil Nadu only on November 10th with 50% capacity. Only about a week back, it started off with 100% capacity. Other markets also, in a phased manner, they've opened up. So the actual acquisition of movies, conversion of movies for the theatrical to the satellite is yet to happen in a big manner for the current quarter. So this year, I think we should be in the range of maybe around 280 to 290 crores. Next fiscal, we should be maybe looking at around 350 odd crores. It all depends on how quickly the movies get released, because I think once this 100% norm is into play, there'll be a rush of movies getting released onto the ground and to the theater. So I think we'll have to wait and see how many of them actually in the pipeline will get released. So as we stand now, maybe around 350 crores is what we're looking at for the next fiscal.
Okay, that's quite helpful. And lastly, so we refer to some big ticket launches and the television business that we alluded to earlier. So given that in mind, what sort of increase we should look at in FY22 as far as television programs are concerned, excluding the film-related costs? Would there be a material increase from the normalized levels, or in overall context of things, it may not change much?
So I think basically asking in terms of the content cost, what is the sort of an increase we should have? Yeah, I think if you take base as this year, which is 2021, where at least 2 quarters was a complete washout, where there was no content cost at all, there will be a substantial increase. But if you take 2020 as a base case, we can expect at least 20-25% increase in the content cost.
Versus FY20 levels, right?
Yes.
Okay. Thanks a lot, and wish you all the best.
Thank you. A reminder to participants, if you wish to ask a question, please press star and 1. The next question is from the line of Karan Taurani from Elara Capital. Please go ahead.
Hi, thanks for taking my question. My question was firstly, on the digital revenue front. So you mentioned 200 crores. Of course, you can't give the breakup of that, but can you hear me now? Just give me one second.
Yeah, please go ahead.
Yeah, I'm audible now?
Yes, very much.
Yes, go ahead.
So I just want to get some sense on the digital revenue, which is of 200 crores. Can you give us some sense in terms of what would be the kind of course, it's completely SWOT, but what is the kind of growth you've seen here in the last couple of years, and what is the kind of growth expected going ahead? Do you plan to make it AWOT as well, or it will be a pure play SWOT kind of an offering?
No, I think we will continue the current model only. I think SWOT is what I think will continue, and we will try and monetize it, the content, do syndication with all the big telcos. I mean, that's the main focus now for the time being. Maybe I think we are contemplating of launching some premium service, but I think it's all work in progress. It's not concluded on it.
Right. And how much of this largely would be, customers acquired through you and through, telcos and other things put together? And syndication would be a small proportion of this entire digital revenue. Just some color on that as well.
Predominantly, it is all through the telcos revenue. I think the direct revenue could be, not this.
No, we don't disclose the segmentation between the normal digital on the pay channel side and the split for Sunnext vis-a-vis the telecom operators. So, but like I said, it's a very small portion.
Got it.
But the last couple of years, definitely there has been a significant growth because we have entered into agreements with almost all the telcos. And so there is a substantial fixed revenue which comes in from these guys on a month-on-month basis. And wherever agreements have ended, we have been able to renew them at a substantially higher number. So that also has added to the incremental growth in digital revenues on the OTT platform.
Right, perfect. And second thing I want to, there's a consistent underperformance in terms of advertising revenue in your key markets, which is Tamil and Telugu. Now, what is the strategy or the ideation here? Because I think unless you don't come up with some differentiated large non-fiction kind of content, this is going to prevail. So, I mean, have you all given some kind of thought on that front as well, in terms of the advertising growth coming back in line with industry averages or probably outperforming industry averages?
So like I mentioned, we've already finalized some formatted shows. You will see some announcement happening, or the promos would go on our channels in the next couple of weeks. So I think we have finalized everything. So we will see a big change in terms of our approach towards non-fiction. And we will use that as a base to build traction to all our fiction shows. So we like I said, we've almost finalized everything. So beginning Q1 of the next financial year, we will see unveiling of big ticket shows in our network.
Right. Just one last question, if I may. So, the global OTT giants are coming very aggressively in the South market. And, you've given a guidance of 250 odd crores for your Sunnext original web series budget. So, I mean, firstly, do you think that kind of budget is enough? And what is the kind of outlay you're expecting in terms of number of web series, or probably some breakup in terms of investment into movies or in terms of web series? Any idea on that?
Karan, see, one thing that we have successfully demonstrated over the years is that, we've always cut the coat according to the cloth. If I were to imitate a strategy which works for Netflix and Amazon, it may not work for me. There is a market that we know exists, which we know we will profitably exploit. So it's not that, we're going to shy away from making investments. If need be, we'll have to step it up, and we may have to nurture that business. But at this point in time, we don't expect that, it is going to be such a disruption that, we're going to sort of bet the farm on the OTT business. I reasonably am confident, going by the kind of momentum that we're seeing on our traditional business, our subscription revenues, and that's why, we have the confidence to run it on a subscription-based service. So we will make sure that the platform is robust, ready, and about to fire. And should there be a complete switch in the way the audiences wanted, I mean, if it reaches a point where we see a depth of channels and everything except live sports becomes a non-linear kind of an offering, we'll have to flip our business model. But my own feeling is that point has not yet arrived in India.
Right. Great. Thank you very much. That's it from my side.
Yeah.
Thank you. The next question is from the line of Vivekanand S. from Ambit. Please go ahead.
Hi. Thank you for the opportunity. Couple of quick questions. One is on Sunnext international strategy. I'm sure that the South Indian diaspora spread across the globe would be quite hungry for the content that we have. So have we launched internationally across markets? And what are your thoughts, SL, in terms of a strategy there? Because I think we may have to forego some subscription revenue from the TV content distributors there. Second question is on the Indian market.
Yeah, Vivek, let me just answer that. Right. There are certain places where, we wouldn't want to disturb. Like, for instance, Astro Malaysia is one of those long-standing, arrangements that we have. About 9% of Malaysian population is ethnic Tamil. And I think, if my memory serves me right, there are about 220,000 homes or some number like that. It's 100% penetrated. So, and there are people, it's very similar to the Tamil, tier 2, tier 3 kind of practice where the family sits together and watches. But it could be changing dramatically in a place like, say, California or New Jersey, where the Tamil families who've been there for a while, their own kids are very, very different. So they may not be watching. So there, we could, go for an alternate strategy and discontinue arrangements with local cable people or DTH people and aggressively promote Sunnext. Because, this is all short format and people are watching it on the go. Now people are not watching at all, and they sit, like my brother, he lives in Midtown Manhattan. He watches Sunnext only on weekends when he has the time. But he has a Sunnext connection. And the best part of this kind of a product is it gives convenience. So it's a very differentiated strategy depending on the kind of markets we serve. There's no one size fits all. And but one thing is for sure, everybody who has something to do with South India likes to have a Sunnext. That is, in fact, I have a classmate. He works in Myanmar. And as soon as he got posted there, he quit a very large bank and he joined a local Burmese bank. And the first thing he wanted was Sunnext. So these kind of people will always be there, from all over the world. We are doing a limited amount of promoting this in some overseas markets, especially where we know there is a large South Indian diaspora like Middle East or South Africa, or Southeast Asia, or Sri Lanka, or UK, and Canada, and US. We don't do anything in markets like Eastern Europe or Latin America because we know that the market is not there. But even there, like I told you, the Myanmar example, people who are aware of this product reach out for this product. So one good thing that we have done is we made sure that the product is extremely robust. In fact, in terms of uptimes and all that, we are one of the best OTT platforms in India. We work with the best in the business, all top-rated Silicon Valley technology majors. So we have the product which is ready. And as somebody asked earlier, what would be the time when you start investing in web series and originals? That's the only question that, we need to address. But otherwise, the product is up and ready and running.
Right. That makes sense, SL. Just that when we look at the revenue numbers, the overseas revenue has not been growing. So I was just
there is one issue. One of the large distributors, has gone into a bit of a stress. In fact, we have set up some provisions because some receivables were overdue, and we have not recognized revenues for this quarter. So these things will keep going up and down. There'll be a little bit of lumpiness because we would not like to, accrue revenues where contracts are not renewed on time. So, but over time, these things just catch up. So if you see from quarter to quarter, there could be some troughs and valleys. But if you look at it over a year on year, these things will just get ironed out.
Sure. Okay. This was helpful. The second question is with respect to the TV business. So appreciate your comments on linear TV having some sort of growth longevity in India and therefore potentially making investment case compelling enough for footprint expansion. So given how the regulator is looking at this industry and subscription monetization becoming challenging, are we likely to see an continued ad-centric model in, say, non-South states where, the product is priced very attractively, so all distributors carry it, and anyway, the regulator doesn't have a problem with, cheap content, right? So how should we think about that? And I'm asking this question in light of Bengali and Marathi, where in Bengali we now have some experience, right?
No, but my own personal view is, we shouldn't have a dispensation where, there is any price control. In fact, we are now living in an India where prices of onions and tomatoes have been decontrolled. It is extremely unusual that the regulator wants to, put price controls. Nowhere in the world we have price controls. Pay-per-view market for boxing in the U.S. is $100. The fight may not even last for 10 minutes. So that's why the industry has gone for, legal remedies. It's sub judice. With great respect to the courts, I shouldn't say anything further on this. But we believe that broadcasters should have unfettered rights to price the channel the way they want. End of the day, everybody wants to serve the customer. And, we don't have price control on airline tickets. So why should we have this on TV channels? Nowhere in the world there is price control. So that said, we would like to, go with a model where we price. Because if you don't respect your product, no one else will. Why should anybody give anything for free? There's so much of blood, sweat and tears that goes into the production of a movie or a program. And therefore, it should be priced appropriately. That's my view.
Right. So just to extend this argument, right now, when your business plan factors in a certain subscription ramp up for channels that mature, let's say in the markets that you launch, Bengali or say Marathi, with the regulatory impediments, would you relook at this strategy or would you continue regardless?
No, we would like to price everything appropriately. But if it comes to a point where, the law of the land says you shall price it at this and no more, we'll have to look at other strategies and figure out a way. But we'll figure out a way.
Okay. And any update on the on your investment plans in Marathi and Bengali? Any commitment in terms of cash burn or any other metric that you are sharing here?
So like we had mentioned in the past, Bengali anyway actually have launched and we have recently progressed well. We are close to 10% of the overall share. And this financial year, that is next financial year, we will see our Marathi also getting launched. So that's what I think currently our plans are.
Okay. Any guidance on how much EBITDA you are willing to commit to support these markets?
I think possibly next call when we do the March quarter call, we should have a better idea. Things are in the working. It has got delayed primarily because of the COVID during the last 9 months. So we should be able to give you some indication during March, which is in May or so.
Sure. Okay. Thank you. Appreciate your time.
Thank you. A reminder to participants, if you wish to ask a question, please press star and 1. The next question is from the line of Ankur Periwal from Axis. Please go ahead.
Yeah, hi, sir. So just continuing, with the earlier point. So, as if I sum it up, to the comments made earlier in the call, so we are looking at a significant increase in the overall content spend. But more from a capital allocation perspective, which market? So we are talking of, both TV and OTT here. But from, how are you looking at the investments with respect to languages as well as OTT? So, how will be the preference order there?
So in terms of the priority, two big markets out of the south are Tamil and Telugu. So sizable investment in the content will go into this market. Also, we feel the Bengali and Marathi markets are also very, very attractive. And we have made some impact in Bengal. We have been consistently a number 3 player. So purely from a revenue or a return point of view, we feel we will nurture some of these new markets like Bengali and Marathi. So sizable investment will go into these 2 markets and also the 2 new markets which are opening up. Notwithstanding that, or Kannada and Malayalam also will get equal priority, but we feel relatively Bengal, Marathi could be a bigger market than Malayalam. So I think we will be focusing more attention and diverting more resources into these markets and try to achieve, break even, etc. in the near future.
Sure, because the reason I asked this was, while we have been, there in Marathi and Bangla for a while, but, cautiously asked...
Marathi will not launch. Marathi will not launch. Marathi will not launch.
Yeah, Bangla, my bad. So we have been there in Bangla for a few quarters, but cautiously the strategy to sort of, ramp up the content was slower. But you are saying Marathi, Bangla, apart from Tamil, Telugu will also see. And how will you put OTT here? Because while, South Indian content typically is not as expensive as the Hindi one. So obviously, it's more ROC accretive, if I could put it this way. But what are our thoughts there? And whether we will be only focusing on Tamil, Telugu content on OTT, or it will again be across Marathi, Bangla, all the languages?
It will be across all languages. See, I'm telling you surprisingly, just to give you a reference, I think the second largest diaspora is basically the Bengali. So even some of our content, if you track to YouTube, like some shows of Sun Bangla, every day is getting close to 3 million views, which is phenomenal. So that way, I think in terms of traction for the brand, I think we are able to connect to this digital audience very well. So once we are able to get a sizable mass and size, naturally, I think we will continue to gain confidence in terms of investing on the OTT content. So it's definitely across all the markets.
Sure, sir. That's helpful. Aman, do we have any other questions?
No, sir. That was the last question.
Sure.
Thanks a lot, guys.